today's live stream, we're going to start by looking at the dollar, what the dollar is doing. So if we go to the daily time frame, like I said yesterday on the daily time frame, that what I'm looking out to see on the daily time frame is to see a rejection of this key level. And if price does not come into this key level and reject off it, then I will be anticipating to see the overall high right here get swept. So that will be a potential liquidity run. And for me to confirm it to be a liquidity run, it's going to be a run on the high. And then I want to see a sharp displacement to the downside, breaking the 1 hour structure. And then if we do see a retest, that will be an opportunity to get in and then continue to the downside. But if for any reason price comes into this key level, if for any reason price comes into this key level, smashes through it and closes above it, then that could be a potential shift in market structure, because we could then use here as support and a continuation to run this highs. But personally, I wouldn't want to see that because of all the confluence that are showing me that the dollar should go to the downside. And right here, you can see we came into this key level that I outlined and we're showing some rejection. So if we eventually drop off from this key level, what I'm looking forward to see is this low. So after a mitigation at this key level right here, because on the 1 hour time frame, you can see clearly, I talked about this yesterday, we'll have a low, we'll have a high, and then this consolidation, and price made the high right here and it dropped down, breaking this structure. So this is a very big key level to pay attention to. And if we do reject off this position and break this low right here, if for any reason we break this low resting right here, if we break this low, then that means that we could have topped out. This would have been a run on liquidity, shift in market structure, and all we'll be looking towards to see is a retest and then a continuation. So this is what I'm looking forward to see on the dollar, and potentially if we do see this happen, then I'll be looking for potential buys on euro and the other foreign currencies. But meanwhile, euro's not really reached my area of interest where I would have loved to buy it from. And I've not really seen anything exciting on euro for me to engage in the marketplace. So we're going to look at euro shortly. So right here on the euro, we go to the daily time frame. Now on the daily time frame, as you can see so far, we've been making lows and highs. High right here. And then we created a low and then a high and a low and a high and this low, and then we had this expansion and then this low and overall this high. So as you can see, we have an inefficiency resting right here. We're anticipating to see price to feel this inefficiency. But after feeling this inefficiency, we're not just going to dive into the market and say we're buying or selling once we come into it. All we want to see is a shift in market structure, at least a 15-minute shift in market structure that will show us that price could potentially want to go to the upside. And right now you can see that we'll have a high. This high resting right here, you can see that clearly. So on the 15 minutes time frame, that's actually a high. And if price should for any reason break above this high and close above it, we could term that as a shift in market structure and then start looking for potential areas where price could come back into for a retest, and then we'll continue higher. But personally, I would prefer for price to come a little bit to the downside, at least to tap this high, because right here on the 4 hour time frame, you can see right here, we created a high and then a low, high, low, and a high, right? So you can see that this is the structure on the 4 hour time frame, and price came back down to run this liquidity right here. You can see right here, this was the low for the 4 hour time frame and the high for the 4 hour time frame. And right here, we broke that low and then we came back in. This was the last move to the upside. And you can see how nice the price came in, tapped that key level right here, and displaced even lower. So I wouldn't be surprised if something right here within this zone, I wouldn't be surprised if something right here in this zone should reject price to now drop into this key level. So it's either going to be price will reject from here, or it's going to want to run the buy side liquidity above this high so that it can also trigger a lot of people that want to buy it to get into the market. So price could either reject off this key level or run the buy side liquidity above it, inject more buyers into the market, and then potentially drop lower into this level, because this is my high, my low, and my shift. So if I'm to be bullish right now, right here, I would like to see price sink into this zone. Even if it's just a wick, I would like to see price sink into this zone. And then if we now see a rejection of this zone, even if it's a 15 minutes rejection, we will now look for a retest and take it to the upside to run this overall buy side liquidity resting right here. Because on the daily, don't forget our overall drawn liquidity on the daily still remains this key level right here. This remains our overall drawn liquidity. So that is my analysis. That is what I'm watching on the Euro US dollar. And hopefully, if this pans out, that would be amazing. We can capitalize on it and get on a nice trade idea. So for now, I'm just going to be on the sidelines for Euro. I'm not trying to buy it. I'm not trying to sell it either. But if price should come into this key level, I would rather prefer to sell it from here. If I wanted to sell Euro, I'd rather prefer to sell it from here rather than to sell it from this position. And the reason for that is because if you look at this right now, this was the last move. Let me use a bigger time frame. Now, if we invert this chart to look at it, right here was the last candle push up that took liquidity and broke the structure. And I'm more interested in price coming to the body of the candle, because the body of the candle is where I'm more interested if I'm looking for anything, whether it's going to be a buy or sell. The bodies of the candle is where I'm most interested, because that's where the most volume is going to be. So if I'm to execute on this, I'll rather execute from the bodies of the candles. So if price should come into this body of this candle and I see a rejection of this position, then I'll look for sell to sell this into this key level. So that is what I'm going to be watching. So hopefully that works and we can make some money off this trade. But for now, price isn't doing anything amazing. It's not. I actually expected it to just dive into this key level. It's really so close, but for some reason, because of the manipulation in the marketplace, they just don't want to let it dump yet. And also, we have this inefficiency here. So a lot of traders are going to be buying up this key level, because I actually also bought from this low and they went up and delivered a 1:1. I had two entries, but were up in profit 1:1, and trade my stop loss to break even, and then price reversed and took me out at break even. So it happens in the market. That is the reason why it's always essential to use good risk management and also know when to throw your stop loss to break even. Because if I didn't throw my stop loss to break even, I would have lost this trade and it would have been from a profit to a loss. And I don't like having the trade go from a profit to a loss. I'd rather just go out at break even rather than it going from profit to then going into a loss. So that is what I'm looking forward to see on Euro US dollar. We've had a lot of high impact news today, but as you can see, no effect in the market. We had the first one by 8:15, second one by 8:30, and the third one by 9 o'clock. And there's still gonna be another one by 9:30. That'll be on GBP. And the last ones for the day is gonna be by 2:45 on card and also on USD, and 3:30 on card as well. So hopefully the news on the dollar is gonna have some level of impact in the market, because basically all the news that have come out today, to me, they had zero impact. Nothing happened. I wanted to see volatility, but I saw nothing. So I'm not banking on the news. I'm banking on price action, what I see in the market, what price is showing me right now. That's all I'm looking forward. So that being said, we're gonna look at other pairs to see what they're doing. We're gonna start by looking at gold. Yesterday we got into a buy position on gold around this key level, and for some reason I closed that trade. And as you can see, price would have been in profit right now. But that happens in trading. Sometimes we close the trade too early because of some things we see, and we see some things in the marketplace, and it just makes us feel like the trade is invalidated. But that is just price manipulating us to leave the market early. So it happens in trading, and right here was the entry. This right here was our entry yesterday, and right now price could have been in profit and would have been in like 1:1.5 or 1:2 profits right now. But I'm looking for re-entry positions anyway, and hopefully we do get a re-entry position right here. I'm going to explain the reason why I still expect a re-entry position. So we're going to go from the weekly. Now, looking at what the market is doing so far, you can see that on the weekly, we'll have this high right here, and we'll have a low, and then a high, and then we'll have this low. We'll fail to create a higher high, then created this low, and after that, a high, a low, high, low, and this overall high. And after that, we created this overall low. Now you can see this high right here. All we want to see is price rally above this high and close. And right here, as you can see, we ran through it, but we didn't close above this high. So we basically don't know whether price is going to keep going to the upside or whether it wants to reverse after running liquidity from the previous high. So what we do, we go to the daily time frame to see what the market is doing on the daily time frame. On the daily time frame, we can see that price is also bullish. And right here, you can see we rallied above this high, breaking structure right here, and then this low. This high right here will fail to run above this high, fail to run below this low. So what do we do with that information? We start to scale down to the lower time frame to see what the market is doing. On the lower time frame, our range is between this low. Our range is between this low and this overall high right here. So here is the premium, here is a discount. So if you want to buy, want to buy at discount. If you want to sell, want to sell at discount, at premium. So if we want to get into any buy position, it's going to be at a discount. If we want to get into any sell, it's going to be at a premium. And right here, you can see what the market is doing. Right here, we created this high, created this low, created a high, and this low. And then right here, we broke structure right here. After a break of structure, now we're looking for opportunities for price to come to the downside. Go to the 1 hour time frame to see what could potentially bring us to the downside. And right here, we can see our inefficiency. You can see the inefficiency. So all we want to see is price coming to this inefficiency, and we want to see a 15 minutes, 30 minutes, or a 1 hour shift in market structure of this key level. And if we go to 15 minutes, you can see very clearly we'll have a high, we'll have a low, and right here we can see clearly a break of structure. What was the last sell before the break of structure? We'll go to 1 hour time frame to look for it. And right here it is. We'll focus on the bodies of the candle because that's where most volume is. Now you can see clearly how price is coming to that key level the first time, second time, third time, fourth time, fifth time. And within all this time of price coming into this key level, look right here. Look below here. You can see none of those candles closed below this position, showing you that there's been a lot of accumulation in this key level. The institutions has been accumulating long positions right here. Long positions has been accumulated from this key level. So what we now do with that information is we now want to see opportunities. We're looking for opportunities to go long from this position. And now if we look right here closely, you will see that price in this position, it created a high and a low, and then we had a break of structure right here. You can see we have a break of structure right here, a high, a low, break of structure, and a retest back in this key level again. Now, after this retest back at this key level, all we want to see from this position is a 5 minutes break of structure. And then right here, you can see we'll have a high and a low. And right here is our break of structure. So you can see the break of structure happened right here. So we'll start looking for places that price could potentially retest. Go to 15 minutes time frame. On the 15 minutes time frame, we can invert this chart because we really want to see the actual key level that took liquidity and broke structure. And right here, see this candle made impulsive move to the upside, took liquidity from here. And next thing we saw was a break of structure right here. I know you must be wondering, why do I invert my chart? Why not just look at it the way it is? The reason for this is because sometimes when I look at price the way it is, it can get confusing because they're manipulating the market to be confusing. And when I invert the chart and I now look at it as something different, something else, I remove that psychological effect that it has on me that I'm looking at gold. And now just look at it like I'm looking at just a random pair. It can be euro, US dollar, it can be crypto, it can be anything. It doesn't really now have to need to now have a name. It's just the charts. And right here was the last impulsive move to the upside that took liquidity before an expansion that broke this structure. So right here is my key level. That is the reason why I have a buy limit order right here. Now my buy limit order is right here, and right here is my stop loss order. This low is my stop loss order. So if price comes below this low, it's going to take me out. Just 1 or 2 pips below this low. That's where my stop loss is at. And right here is the entry. So I'm going to be watching this closely, and if it eventually plays out, that'll be a beautiful trade. And right here, you can see the take profit position right here. It's a beautiful 1:4 risk to reward ratio. And hopefully that plays out and we can all make some profit. And another thing to even notice, if you look at that zone, there's an inefficiency resting right there as well. You can see the inefficiency. And if this zone does not send us to the downside, then it means we're going to have a heavy expansion. So I'm going to show you the take profit positions. This is another take profit position, just in case this trade gets activated, so you know where to be taking profits. This is the first take profit position, second take profit position, third take profit position, and then the last take profit position is the consequent encroachments right here. The midpoint. Once price comes there, you close everything and get out of the market. So that is my analysis on gold, and I'm gonna be watching this closely, and hopefully this plays out, and we can all make some money today. It's Wednesday, 24th of January. So we're gonna look at another pair today, and we're gonna look at USD card. I did this analysis on USD card. I was anticipating for this to happen, but I didn't take the trade because I was just a little bit distracted yesterday by so many things I was doing at the office. But no excuses in trading. You just have to focus on what you gotta do. Right here, we have this 1 hour swing low, swing high, and then a break of structure. This was the last move to the upside before it dropped down that broke the structure. And I was anticipating to see a 5 minute shift to market structure right here. And if we go to 5 minutes, you can see basically one of the reasons why I just got distracted from this trade was we first made this low and this high and we broke. I didn't like this setup. I didn't like this break. I wanted to see a solid swing break, like a low, a high, and a solid swing low break on 5 minutes. So when price did this, I didn't like the trade. I didn't take it, and I just ignored the trade and removed my alert on it because I didn't like how it was moving. But then this was a beautiful swing low break. This was the low, a high, and a break. Right here was the break. You can see the break right here. And after it got broken, point of interest, last impulsive move to the upside before it dropped down the broke structure. This should be where we put our limit orders. And look at how nicely price came into that key level. Tapped in the first time, second time, third time, and then dropped. Stop loss resting above this high. And look at how nicely price is dropping. It's a 1:4 risk to reward ratio. And we all would have been in profit right now if I had placed the sell limit order on this trade. And it was yesterday. I think it was at midnight, 12 o'clock New York time yesterday. So that's I think that's basically around 7 p.m. London time or something. So we weren't even in the office by then. So I think it would have been hard to be on this trade anyway. But it is what it is, and this is basically why I talk about learning the skill yourself, so that whatever time zone that you are and you can just basically use the skill to get into the market independently. And if you haven't watched my model 1 to 4, I would say it's best to watch it. It's going to help you in understanding why I'm looking for certain things in trades, why I'm taking a trade, why I'm leaving the trade or closing the trade, or why a trade failed to kick us in, or why a trade took us out and hit our stop loss. So if you watch the models 1 to 4, you're going to learn so much about trading, so much about how to even invest, because the strategy doesn't just work in trading alone. It's something you can also use in investing, because you need to know when prices are at a discount and also when prices are at a premium. Because right now, for example, if we're looking at USD card overall market structure, this is the high, this is the low, and within this range, you can see price came to this key level right here, which is a premium, and would displace to the downside. Now, you can see that blue line right here. That's the equilibrium. Look at how nicely price came into it and displaced to the downside. That's a premium. The institutions are selling at a premium. Now we're at a discount in the overall market direction. But I'm not going to be looking for any buys, even though we're in a discount on USD card. And the reason is because I'm already anticipating for a sell run on sell side liquidity resting right here. So I'm not going to be trying to buy it. I will just stay on the sidelines when it's in discount. But when it's in premium, I'm looking for sells heavily. And because we have a high impact news today, price could actually spike up back to tap this premium position one last time. And if it does happen and I do see a solid shift in market structure, if price should for any reason spike into this place, because we have the premium level resting above these highs, if we spike in there with the news coming out today by 2 p.m. and I see a solid displacement to the downside and break, I'll look for sells on USD card, because that will be a high probability sell to run price to the sell side. And right here could be my take profit position. So that is my analysis on USD card and what I'm looking forward to see. If I was on this trade before the news, I'm going to close it. And the reason is not because I don't believe the trade is going to pan out, but it's just because I have the premium resting directly above this key level, and price could actually want to use that as an excuse to run that liquidity resting right here, because they also know that so many traders are going to place in their stop losses around, above these highs, and they could want to run that for the last time. And I'm looking at to see if there's any inefficiency above these highs, and there isn't. So maybe the news could just drop price drastically, or the news could take us to the upside to run this buy side liquidity. But whichever what happens, we're just going to be on the sidelines and see what the market is going to do. So I appreciate you all for tuning in today. You all amazing. Thank you for being a part of my Wall Club. And until next time, I will talk to you all later. Have an amazing day, everyone.